Welcome to Buy, Hold, Sell, brought to you by Livewire Markets. My name is Matthew Kidman, and today we're going to wind back the clock and talk about dividends. Yes, remember that? That's what we used to search for in companies before growth became the dominant theme. Now it's back to dividends. And to talk about that, we've got Blake Hendricks from Firetrail and Michelle Lopez from Aberdeen. Michelle, start with you. The big Australian, BHP. I looked at it, $2.10, 9% running yield. That's not a dividend, that's alpha. Buy, hold or sell?
It's a buy. It's a buy for us, and yes, it's got a 9% and even a 6% yield going forward as commodity prices come back a little bit, which is our expectation. But clearly we've got a very constructive outlook from a demand perspective. We've got China, expectations of stimulus coming through. We're starting to see the property market over there pick up again, and infrastructure. So I think the near term is very well supported from a cash flow perspective, and from a valuation perspective, it's trading close to its NAV. So it's a buy.
BHP, well, you've got to own it if you own the index here. It's that big these days, but the dividend was terrific. Buy, hold or sell, Blake?
Yeah, it's a hold. So, that 9% running yield, I agree with Michelle. If you run iron ore down into the, closer to 70, you start looking at a 6% dividend yield, but it's net cash, huge amounts of assets. What's not to like? I'll tell you what, there's some better opportunities out there in some of the resource land, and I would challenge viewers to find a commodity company that has debt at the moment, because they are making more money than they know what to do with.
Novated leases, been a bit on the nose recently, but Smart Group, good result, people liked it, big dividend, buy, hold or sell?
It's a hold for me. It's just pretty boring. I mean, hey, the industry grows at 2 to 3 to 4%. They're doing their thing. I mean, you look at the margins, they haven't changed for 5 years. The EBITDA really hasn't changed for 5 years. It is what it is.
Not bad for a half-year result, and you're getting over 5% yield. Smart Group, buy, hold or sell?
Look, I'm with Blake on this. It's a hold. And again, I can't get excited. It is what it is. It's on 15 times. It's paying a 6% dividend yield, if that's what you're after. And to be fair, they've done a very decent job in getting through the challenges of the last couple of years of disruption of vehicle supply. And the outlook's okay, but also in the back of my mind, I've got this regulatory risk overhang. Still, so I know there's bipartisan support for the industry. However, that still lingers for me, so it's a hold.
Never thought I'd be saying this. Cochlear, one of the great growth stories of Australia. Not a bad yield. Buy, hold or sell?
It's a buy. So I agree with you. It's not often I talk to Cochlear as a dividend stock. It isn't a high yielding stock, but what it is it's a growth yield and a growth dividend. So this is a company that is spinning off a lot of cash. They're unwinding their CapEx program, so they're at the tail end of that. So the free cash flow that they're spinning off is very high. They've got 500 million of net cash on their balance sheet. So I think there's further growth in the dividend, but importantly, operationally, they're just executing well. They're super consistent in what they do. They've got a really clear strategy and invest for the future for growth. So that runway of growth, whether it's earnings or whether it's dividends, is very clear. So it's a buy.
I like that growth yield. It's been tough for Cochlear. A couple of years, hospitals closed around the world. Things are opening up. Buy, hold or sell?
I think it's a hold, but I think if you're buying it for a dividend, I had a look online and I actually got a 3-year term deposit quote from Judo Bank, 1.55%. So that beats Cochlear's 1.5 and 1.5 is unfranked too. So I think for a dividend, it's a sell. But the market's growing, they're holding share in the US, growing a bit in Europe. It's fine, but I'm not buying it for dividends.
Okay. Lotteries online, we've all had a bit of a taste recently. We had the jackpot, 120 million. Jumbo Interactive, buy, hold or sell?
Yeah, Jumbo's a sell. We love the migration from in-person to online lotteries. Current penetration's 36%, but we just think the better way to play it's Tabcorp, so it's a sell.
Michelle, Tabcorp, they've kind of handed the keys over to Jumbo in recent years.
They have.
For that online, buy, hold or sell?
It's a hold, and it's a hold because at this point they are pivoting the business somewhat. They've got that really neat domestic lottery business, but they've also got the SaaS over in North America and UK, and just need to see more operating leverage come through from this business. And from a yield perspective, again, they've actually cut their payout ratio. So when they did the last acquisition recently, the payout ratio got reduced. It's now a range of 65 to 85%. And that actually meant that the distribution went backwards. So from a yield perspective, I think there's better options elsewhere.
Okay, good segue. What is that better option? Give us one stock that did a great dividend that we mightn't have seen.
So the one that always gets missed, I find, is Spark. So Spark New Zealand is the incumbent telco over in New Zealand, and similar to Telstra here. But when you think about operationally, they delivered exceptionally strong result. So their mobile division in particular doing really well. They're paying a 5.5% dividend yield. Telstra's on 4%. They've got an under-levered balance sheet, which means they can carry on investing and pay out a dividend. And then they're looking to monetise their infrastructure assets like Telstra did last year. So we could be coming into a nice pot of cash and further capital management. So I think that's one that's got a very consistent dividend. It's got growth within the dividend, given the cash flow that it's spinning off, the free cash flow, and you could get some capital management in the coming 12, 18 months.
Hard to beat Spark. Got something, Blake?
Oh, well, I've taken a bit of a different tack on this one. I've got BlueScope, and the dividend was okay, but they made 700 mil of underlying free cash flow in the first half, and they were returning 700 mil through a bigger buyback. So they've now got $1 billion buyback underway at the moment.
They're showing off, aren't they?
They are showing off. I mean, it's been in rude health because steel margins were so high. But we actually think, some of those margins have retraced, but demand actually is pretty good for steel. We can't decarbonise without steel. And on the supply side, particularly in the US, you're seeing very rational capacity shuts. So we really like it. Buy.
So you want to give your portfolio a bit of spark? Look for those yields because they're going to make it a lot better for you. If you like the show, give it a thumbs up, and why don't you go out and you can watch it again by signing up to the Livewire YouTube channel.